It's about to crash. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, the entire stock market is now hinged around one stock that is predicting that the entire market is going to come crashing down as liquidity dries up. Now, we talked about liquidity on yesterday's show, and whether or not it has a material impact on the market remains to be seen. What matters is how people perceive a liquidity drain and how they trade it. If everyone believes that stocks are going to head down, what it means is they're going to position and start selling out of the market, and we take a look at the machine positioning, you're going to see that they are keyed in a big way to see stocks come crumbling down. Now let's go back to last week. I want to look at this stock. We talked about Nvidia last week and that exhaustion gap to the upside. You know, people who like to short sell the market sometimes complain, I can't find good opportunities. Well, here's one staring you right in the face, because look at this. We'll go down to the RSI. It is max on the overbought side. We'll look at the MACD. It's maxed out on the overbought side. You see this huge gap up. It makes no sense. But look at this. You see a left shoulder, head, right shoulder, a rough break of the neckline here. Stock goes up, gaps out. And what do you see here? Here's your exhaustion move, potential island gap. If this happens, we'll cover that in a future show to the downside. But in the meantime, if you zoom out on this, you can see this is just lights out to the upside. If we see Nvidia come crumbling down from here, it'll bring the entire tech space with it. So keep an eye on that. And again, if you're not on the short side, if you don't trade that, then don't do that. That's not something you should worry about at this time if that's not your skill set. But let's go on, take a look at the machine positioning, because as we look back to them, what's important to understand is if we start to see a move down in the equity markets here, the machines are going to turn into sellers, because what we've been seeing over the last couple of weeks is machines are hitting extreme position where they're maxed out to long side, or they have almost a small amount left to buy before they hit that before they hit the rev limiter. And now we're seeing that. Let's continue here. And what we're looking at is this going back, because what happens is these companies stop reporting data when there's nothing to report to the upside. Here we note from Goldman, we saw last week what happened in that uptape. We had 9.6 billion to buy over a week. We saw that now happen. Markets moved up meaningfully. Now we're at the 1 month. So look at this. In an uptape, we have a little bit more to buy. So take off about 10 trillion. We have a 10 billion off of that. I mean, 2.28 billion to buy to the upside here. That means the downside. Look at this, 209 billion over the next month. So it gives us not a lot of room for error here in the markets. If again we see some reason that Nvidia comes crumbling down and that big gap up suggests at some point it will, could it be tied to a liquidity drain as the Fed or as the Treasury now starts to draw money out of the economy? That'll happen on Monday. That remains to be seen where the markets go. But if it starts moving down, watch for these machines to sell, because here we can look at these again, going back to last week, because nobody really wanted to update their data. The risk now remains to the downside. Let's take a look at the closer position. Here we see from TD Securities maxed out to the long. As I've said, no more buying. They're tapped out. And when they do that, what you start to see is the threshold to sell starts going higher and higher and higher. So they're trying to lock in their gains. You know, just by understanding how machines trade the markets is a great way as a trader to learn. When you've made money and the markets move up, move your stop losses up. That's effectively what you're seeing these machines do. So look for under 42.25 on the S&P to sell. Let's take a look at our own screens. What do we see? S&P positive, momentum to the upside. RSI is 66, not completely at overbought territory, but on its way there. MACD has a nice positive cross. Momentum Timer Pro, other than the kind of that 1 day in there, had nice 6 consecutive daily buy signals. We flagged a March 30th buy it open at 404. Now I'm telling you, tighten up your stop losses. Look, you made some money here. If you bought this, tighten it up. We're at 427.92, and we hit just right below our target last week. Remember, 432.43 was our upside target. Just got real close to that. I'm now moving that up a bit because I still think there's a potential here that we could see the S&P go a little bit higher. Let's take a look at our machine positioning. You know, we talk about our CTA-Timer Pro report. It's been telling you, look, it nailed this. I got a bunch of emails. People said, man, that thing was spot on. I know. I built it to be a better mimic of the machines, and they were. Here we see our Momentum Timer Pro report maxed out on the 1 month. 3 month window is at a mid-sized position. 6 month window momentum's at a mid-sized position. Everything's telling you, look, there's a potential little bit more to the upside, but may not be a whole lot more. Let's flip over here to the S&P 500. We're looking at SPY. Got the volume profile turned on. We noted this before. Break above that would be bullish. Then we noted a break above the neckline would be bullish as well. Here you have left shoulder, head, right shoulder, another left shoulder, another right shoulder. Breakout to the upside. You know, what are we talking about here? Moving this up to potentially around the 438 level. So it's right in here where we see prior level of support then turns into resistance. So I think there's a little more upside maybe on the S&P as it exhausts itself out. Downside risk at the moment is right back to the neckline. So potential pullback right to where around the 21-day moving average is. But broadly speaking, I think we've got some upside momentum there. Now tech is going to be, you know, heavily dependent here on Nvidia. Let's take a look at QQQ. Momentum is positive. The RSI is at 76. MACD's got a positive cross. Momentum Timer Pro flag 20 consecutive daily buy signals. We had on the show a March 30th buy to open at 315. I'm telling you, tighten up those stops here. Friday's closing at 354. We flagged last week at 353. Now, can this get a little higher? I think it can. Will be on the backs of Nvidia? Possibly not. Downside target now remains the 21-day moving average. For those who have been wondering, CTA-Timer Pro, do you remember when everything was max shorted out? We've showed you this back in January. If you would have had the report and traded it, you would have known it. $30. Link in the description below if you want to get on that. Look at Momentum Timer Pro. 20 consecutive days of buy signals. Maxed out on the 1, 3, and almost on the 6-month window. And what is that telling you? You know, as an investor, when you see momentum maxed out, you see the machines maxed out, it says, look, if you're entering this now, you're probably a little late. But let's take a look at QQQ anyways. And what do we note here? The upside potential is around 368. So I'm saying we could get up here to that kind of prior level of resistance. It wouldn't surprise me if we got there. Whether it's on the backs of Nvidia or not, I can't say. But look at the RSI, overbought big time. Look at the MACD, overbought. Tells us a little bit more perhaps gas in the tank. When you see these big vertical moves like this, if you bought in back down here where CTA-Timer Pro told you to, or you missed that one and got the second one, you've got this move. Tighten your stops up, hang on to those gains, because that's what matters when you're trading. It's not how much you make, it's how much you keep. Let's continue on now. Let's take a look at the bond market. What we're seeing in the charts there is matching up now what we were hoping to see last week. What we can note, machine positioning here under 3.8% on the 10-year to buy, over 3.95 to sell on the 10-year. So not a lot of movement right now from the machine positioning. They kind of made their move and they're sitting on it. Remember, we talked about this rectangle pattern as a broad reversal. We saw that big move down, and now what we're seeing is anytime you see a price move between the top, upper, and lower bounds of what looks like a rectangle, it becomes a broad signal of a reversal. Momentum on TLT here is still negative. The RSI is down at 40, but kind of moving into that positive territory above 40. MACD still got a negative cross. Actually, I should have updated momentum. It's positive. I messed that up. There you see 3 consecutive daily buy signals. So momentum just turned positive. That's what I meant. March 20th, we still hold a buy it open. Look, when you're trading, you know, not every trade's going to go, but if you have some, and we saw our other trades start to pull out ahead, it means you can give a little bit of tolerance on the ones behind. Notably, looking at this chart pattern says we kind of want to hold on to this, possibly want to add into it as price moves higher. Upside target, I just revised the upside and downside targets slightly. Notably, remember the CTA-Timer Pro was showing these max short out here not too long ago, and now they're moving higher. Again, it started telling you to start taking positions. The easiest report, $30 a month. Link in the description below. We see momentum on the 1 month on Momentum Timer Pro maxed out to the downside again, suggesting, as we know, price went way down. But let's look at this chart pattern on TLT. And what do we see? There's that rectangle pattern. Look, big move down in price. Not really what you want to call a double bottom, because it wasn't, but a bottom was formed, it was reconfirmed, and it moved into this rectangle pattern, indicating a reversal. The breakout of this is going to be around this 108.64. So as this moves up and breaks through these moving averages, notably the 200-day moving average has been a source of resistance. If you get a break above all these moving averages, I'll zoom in here for you. You get a break above these, you want to start adding positions. You get through this 106.39 where all this volume profile of that, and that is over the 6-month, 1 year, and 2 year mark. That's where you really want to start adding positions for a breakout. We're seeing momentum starting to turn back up. We're seeing the MACD starting to turn back up. Still in the early phases, so if you're not comfortable, don't do it, but you're getting close to where you definitely want to start taking a position here. Let's talk about gold. Let's review our call on 100 ounce, not 1,000. I know many of you heard what I said, but didn't see what I showed you in the show. It's a 100 ounce decline. Right now, look at the machine positioning over 2015 to buy. Remember, these things are near maxed out, selling below 1970. Let's take a look at our screens. Remember, we talked about this triple top. Everyone said that doesn't matter. It does matter because, you think about how this is positioned here. A triple top, you have effectively, think of this, an army attacking, defenders holding. Then the army goes, they rebuild, they get pushed back, they come again. They get rejected a second time. They pull back. They get beat up here. They regroup. They make a third attempt, but the third attempt, as we showed you in the volume, was even weaker. It tells you the amount of buyers, the number of attackers left to take gold higher is getting thinner and thinner and thinner. That's why it's a big indicator of reversal and why kind of in the Bible of technical analysis, we see it that way. But look at this, momentum negative. What do we know? RSI is at 42. MACD, negative cross, Momentum Timer Pro, 13 consecutive daily sell signals. Look, we don't tell you what to short. You make those decisions on your own. We'll just tell you this is a potential short opportunity. Friday's closing at 180.105. Quite didn't get down to our downside target. It kind of blipped down there, but notably had an upside target at 184. It actually did kind of get up there. You see the machine positioning remains relatively short. It's kind of making some adjustments here. We note that momentum is squarely to the downside. Let's take a look over and see what's going on with gold and why I still think that call to get down to 1920 is pretty real. Let's look at GLD first. And what do you see? A topping pattern. What happened? It comes up here, gets rejected just shy of his 21-day moving average, just shy of his 50-day moving average. And what is our call here? This gets down to 178 down here, kind of at the bottom where we saw buyers. If it doesn't hold there, you've got some gaps in place to move it down. Let's take a look at gold futures. What do we see that it needs to be under? I'm going to go back and look real quick. 1970 to sell. Let's see where we're at. We're at 1964. So that tells us machines are indeed selling here. Look, it gets rejected at the 21-day and the 50-day moving average. Moving averages are pretty interesting in the sense that, they act as a level of support and resistance. So on the move down, as you're seeing in price, is it kind of thrust back up. If it gets rejected at the bottom end of a moving average, that's generally a bearish signal. You want to see a cross below the moving averages, then a push back up to the bottom of it that gets rejected. Look for price to come down. What just happened in gold? Well, cross below the 50-day, a rally back up off the 100-day, rejection at the 50, price comes down, hit our target at some point here of 1920 an ounce. Look at RSI, momentum to the downside, is trying to fight it. Our MACD is still trending to the downside. Nothing says that momentum has turned here at all. Let's take a look at the gold miners. And what do we see here? A double top, what we said could be a continuation pattern. Are we there yet? Well, let's get a little deeper into here. Momentum is negative. RSI is pulled up to 43. So now RSI is turning into positive momentum category. MACD's got a negative cross. Momentum Timer Pro, 16 consecutive sell signals. So if you said you missed this to the downside, there it was. One thing we note on our CTA-Timer Pro report, when you start to see this thing get down to these big minus numbers, minus 100% on the fast algorithm, minus, near 100% on the slow algorithm, it tells you to start looking for a reversal. Now, what it doesn't tell you is to buy immediately. What it says is put this on your hot list of hot things and watch it. If you catch a reversal on your signals, buy into it and ride it higher. If you miss it, take it off and wait for the next signal to generate. Don't hold on to it and say, I got to play this signal. Look, it's just like anything else. If you miss a round, don't beat yourself up. There's other opportunities that come. And what do we see? Friday's closing at 31.41. Has not gotten down to our downside target yet, but got pretty close. It did get near our upside target. Let's take a look at the charts here for GDX. And what do we note is, of course, there's that double top. Price came down. I thought it was going to get a little lower here. I thought we're going to see kind of support back where we did earlier over the last couple of years. Maybe we get a rejection here. Nobody came back up to this 2-year volume profile line, hit that top end of our target where we kind of said it was going to get to around 32.18. Well, it got pretty close to that. I still think you get a little more rejection here. Price pull back. Maybe the 200-day moving average starts to come support. Look at the RSI. Bounced off oversold territory. territory. Buyers came in right on it, and that's what they're kind of running out of steam here. The MACD kind of looks like it's rolling back over to the downside. So possible entry point coming there in the not too distant future. And last but not least, let's talk about the dollar. We nailed this call. It got right where we said it was going to get to. Momentum remains positive. RSI pulling back from overbought territory. MACD positive. 33 consecutive daily buy signals on Momentum Timer Pro. You're looking for a reversal signal. There you start to get when, hey, this thing's been trending higher. Momentum's been very positive. Upside target 2882. So we think it's can maybe go another move higher. Downside target 2804. Look at this. The CTA-Timer Pro. Remember, this was a minus 100 across the board. People said, no way, dollar's going to rally. And I said, hey, you watch and see. It did. And now it's at the other extreme. So maybe you should be looking at the dollar bearish side. 1 month momentum maxed out. 3 month momentum at mid-size. 6 month at the mid-size. So we're seeing momentum pretty strong to the upside. Let's take a look at the dollar here. UUP getting up to its 200-day moving average, right where we said. We think maybe there's another push higher here before that gets rejected. Look at the dollar index. Didn't get up to the 200-day there, but it did get on what we saw as UUP. I still think it makes kind of another attempt here to go a little bit higher before it resumes its downward trend. But this hitting this 200-day moving average here, that is kind of an ominous sign. The 200 days been a sign of rejection before. You can see overbought territory. You can see it on the MACD. The momentum starting to turn, but remember, price and momentum, momentum tends to lead price. So what you can still see here is one last hoorah in price. So don't be surprised if it does make another move to the high upside before it turns down. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.